All right, guys. So since I'm out tomorrow, I went ahead and decided to do another YouTube video. So we're going to talk about deductions. And deductions are one of the most complicated things that we're going to talk about in this unit. And that's because the laws for deductions change every single year. So your CPAs and people who work at H&R Block, they go through and they relearn these tax laws every single year. And they relearn the small little intricacies of deductions. So we're going to hit just the very, very basic surface level so that we can get a general idea of what's going on. Okay. So let's start off with what is a deduction. So they define a deduction as a tax deduction is a deduction that lowers a person or organization's tax liability by lowering their taxable income. So after talking to my mom extensively this evening about what is a tax deduction, I finally came to the understanding that if you take a person's gross wages, you take, say, I make $50,000 a year. That's not accurate, but for the sake of this discussion, let's say 50,000. So I make $50,000 a year, and my standard deduction is 12,000. So I'm going to take that 50,000 and subtract my deduction from it. Well, now my income is only 38,000. And the 38,000 is what I'm allowed to pay taxes on, or what I'm required to pay taxes on. So a deduction takes the amount of money that you get each year and it lowers it so that you're not paying taxes on all of it. You're only paying taxes on some of it. Deductions are typically expenses that the taxpayer incurs during the year that can be applied against or subtracted from their gross income in order to figure out how much tax is owed. So again, the deduction comes off of your annual income. That way you're lowering it so you're not paying as much. Taxpayers have the option to take a standard deduction or an itemized deduction. And after talking to several of the teachers, majority of the people at school will take the standard deduction because in order to do an itemized deduction, you have to be very organized, very meticulous, have all of your receipts, have all of your records, and you have to prove that you have got more items, more over the standard deduction. So a standard deduction is typically 12,000 and some change. We'll look at that on the next slide. But in order to go itemized, it has to be in excess of that, or else it's not lucrative for you. You might as well file the standard deduction. Does that make sense? Okay, let's go on. So for the 2020 year, which is what we're going to be filing because your tax season is for the year prior to, so a 2020 standard deduction amount for a single taxpayer, which is you and me, is $12,400. So in order to do something more than the standard deduction, I would need to prove that I have more deductions than 12,400, even 12,500. That would lower my wages, my income lower than what the standard deduction did. So that would benefit me. Now, the problem is most of us are not able to prove that because we don't keep up with receipts. We don't keep up with our records. Okay. The next one is 12,400 for married taxpayers filing separately. So we talked about that. If a couple is married, but then they separated and they're filing two separate ones and they don't want to have their return coming over here, or they don't want their return coming over here, well, then aren't they just really single people who are legally still married? So those people would file married separately, and they're still going to get a 12,400 deduction because that's really where they're at, right? So head of household, they will get a 18,650 deduction. Married filing jointly, those are two separate people filing together. So they get the 24,800 because 12,400 and 12,400 make 24,800. And then the qualifying widow, they also get the $24,800 because they're still technically married, but their spouse has passed away. So they're still going to get the married deduction. So we talked about itemized deductions a little bit. An itemized deduction comes with a huge, long laundry list of rules. And after talking to a few of the teachers who were very frustrated with itemized deductions, they explained to me it's getting harder and harder and harder to file itemized because less and less stuff qualifies. An itemized deduction is an expenditure on eligible products, services, and contributions that can be subtracted from your adjusted gross income, which again is what your wages, to reduce your tax bill. You must save all receipts in case of the IRS auditing you. Let me see if I can move my little video. Okay, I can. Look at that. You must save all your receipts in case of an audit. Additional proof of expenses include bank statements, medical bills, tax receipts for qualified charitable organizations. So if you want to make a donation to Goodwill, well, you can donate a couch to Goodwill, or you can donate a bag of clothes to Goodwill. And they're going to give you a receipt that's a proof of donation, and you write down the value of your donation. Or maybe you want to donate a car to Khan Academy or something like that, where the car is a donation, and that's a tax write-off, which means they're going to give you a proof of donation, and that's something that you're going to keep for your tax return so that you can try to file itemized, because the value of that car could count. Also, proof of paying medical bills. Just to have medical bills doesn't count. You have to prove that you put money towards it and made payments towards it. So you can look here at the deductions and what you can and can't itemize. In all reality, if you're going to file itemized, it is best to get a expert involved, because there are things that you can and you can't itemize. Just to go out to dinner, and if you're at the Ritz-Carlton for dinner and you want to talk about dinner and you want to make that a tax write-off, that gets into gray area. So it would be in your best interest and in safety to talk to a professional, make sure that the right stuff has been done and the right mindset is in place. That way you don't get in trouble or you don't get audited. And if you do get audited, you have the right stuff to back you up. Okay, so that's all I have for us on itemized deductions. What I need you guys to do now is to go back to your modules, and then you're going to click on the lesson assignment. It's a little mini quiz that is going to go over practicing how to calculate itemized deductions. The first two questions, you are actually going to add up your itemized deductions and tell me what the itemized deductions are. Since it's a fill in the blank, you need to make sure that you're using your dollar sign. You need to make sure that you're using a comma if it's over $1,000. And you need to make sure that your money is in decimal form for correct change. Money is 2 decimal places, not 1. So if it ends in 20, it needs to be 0.20, or else your Canvas assignment is going to get graded incorrectly. The last 3 questions, you're going to calculate the itemized deductions, but then you're also going to discuss which would be the better option. Is standard or itemized going to be in the best interest of the person? So what you really need to pay attention to is this slide. Oh, there was another slide. Oh, it's okay. This slide here. I want you to make sure that if it says they are single, you're looking at the single standard deduction. Or if it says that they're married, that you're looking at the married standard deduction. Or if it says that they're a widow, make sure you're looking at the widow standard deduction. Because when you add up your deductions, you want to make sure that your itemized is more than your standard, or else you need to stick with standard. All right? If you have any questions, please feel free to email me on Friday. I'm going to be kind of crazy busy running around working the tournament, But when I get your email, I will respond as quick as possible. All right. Hope you guys have a great weekend, a great rest of your week, and I will see you guys next week. Bye.